back in the Bluegrass today. I'm Steve Farno and
Brad.schooler with Ruoff Mortgage.
and I'm with Keller Williams Bluegrass and Steve Farno Realty. Today we're just going to have a little conversation a little bit on National Sandwich Day, which I'm excited about. Going to talk a little bit about pre-approvals and how important those are. Talk a little bit about credit scores and how that impacts that process and how you can maybe do some things to help improve it. And I get into a little bit about where rates are today and where they might be headed and how that might impact your decisions moving forward.
Yeah, it's definitely a good topic right now to get into. So everything you talk about is really important, especially in this market where it's difficult to find a house or even get a full house.
Yeah, we have historically low inventory, as everybody probably is aware, and since COVID, the market has been kind of the Wild West, and I really feel that being nimble and being ready to move quickly is really important. And which is why having your pre-approvals in place, whether you're looking to buy next week or 3 or 4, 6 months from now, getting that set up will help to alleviate any potential pitfalls you might run into down the road.
Yeah, exactly. That's what I tell everybody all the time. You want to get pre-approved as soon as possible. It doesn't really cost anything. It shouldn't cost anything. But it gives you the information you need to get the best loan you can, get the best deal you can. I mean, you may be able to get pre-approved now, but if you're not going to buy for 6 months, if we can look and see at your entire situation, your cash flows, interest rates, what they are at that time because of your credit score, see if we can get your credit score up. And just look at it, you're going to be in a much better and well-informed position when you are ready to buy.
What are some of the things that you've seen as a lender that because they had that pre-approval in place, you were able to maybe save a deal or have the information you needed to help someone that maybe wouldn't have been able to buy? Is there anything that...
Well, I mean, there's a couple of things that can pop up. One, just as little as since COVID, your credit score affects interest rate even more. It used to be anybody over 720 to 760 had about the same chance at the same interest rate.
Right.
Now it's different. So I had a person start to look a few months ago. They were at 758. We have a calculator, a simulator, I guess, on our system that tells us if they do certain things, we can get their score up. So this person had to spend $13 on a credit card to pay it down, and their score went from 758 to 764, and it dropped a quarter point on your interest rate. So there it saves them thousands of dollars.
A quarter point on your interest rate, how much does that impact your monthly payment on a mortgage rate?
It just depends on
the price of the
price of the house, but generally anywhere from $15 to $25. So you're talking a few $100s a year.
Yeah.
Compounded interest over the entire life. That's a lot of money for $13.
Yeah.
Just taking the extra time to get pre-approved up front.
Are there any big don'ts when it comes to your credit score and trying to improve it? Is there anything that you would be like, don't do this when you're trying to work on a credit score? If you think you know, what is the truth on what you shouldn't do?
Yeah, there are a few. The big one is Credit Karma's wrong. If you don't look at your Credit Karma score, and it's not that it's a bad thing. It's that they go off what's called a Vanguard score.
So it's not as accurate as the true score is.
We go off FICO score, which is your entire credit history.
Gotcha.
What they go off is what's called a Vanguard score. It's a 2-year snapshot of the last 2 years of their credit report. So if they had really good credit and then had a little hiccup in the last 2 years, it'll be lower than it should be. If they've had really poor credit in the past, and their last 2 years have been really, really good, it'll be a little better than it should be. So you don't really want to go off that. And the problem is, everybody thinks they know about credit. Most people don't. I didn't know until I got in this industry how credit works. So if you have collections, at a certain point, you need to look at them and see if they need to be paid.
Gotcha. So you're saying that some things don't need to be paid?
Correct. Well, it's not that they don't need to be paid. It's not that they don't need to be paid. It's that they may not help your credit score increase.
Gotcha.
So if they have been on your credit report for a certain amount of time, then paying them off will not help your credit.
Gotcha.
It'll help your heart and the fact that you're paying something that you might should have paid, but it will not help the credit score. So I've had this happen before, where a client has waited 6 months to talk to me, because in that 6 months they wanted to pay off those collections before they talked to me, because they didn't want money there. They didn't want me to see them. They wanted the score to be better. They just wasted that money.
I think this is a great example of why the pre-approval to start this whole process is so key, because we can uncover all of the things that we need to know about to ensure that we can get the best rates and that we don't have any hiccups when we get to closing. And so don't be embarrassed. I really think it's important to understand how important it is to get pre-approved, to start the process. We have a file that we can add to easily moving forward. So you have kind of your credit fingerprint and your credit pre-approval that we create, and that allows us to be able to consistently have the information we need, and we can always update that much quicker after it's already in place. The initial pre-approval, there's a lot of things to fill out sometimes, and most of it's fairly simple online, right? An online form. But it may take you a minute to look it up and to find all that information if you don't have it readily available. So get that taken care of quickly.
That's part of my job, is to look at your information. I mean, I see all different types of credits every day. You know, people have good stuff, bad stuff. Everybody has a little pickup now and then, but it's important to understand it. I actually did an application this week. When I pulled the credit and looked at it, the borrower was okay, but he was 30 days late that day on a credit card of $200. Like the minimum payment was like $20. And I called him and I said, hey, look, I looked at it. I can get you pre-approved. Did you know you're 30 days late today? He goes, oh man, I forgot about that card. I thought it automatically deducted. So I said, well, there are a couple tricks. If it's the first day, if you call the creditor and you tell them you're trying to buy a house, they may take mercy on you and take it off. But that always has to happen within the first 30, 45 days. So there has to be an explanation of why. Some creditors will take it off. Not always, but some will. So catching that quickly, he's in the process of fixing that. He said, well, I'm not going to buy for another 2 or 3 months. I was like, right, we'll do this. And then I laid out another few things he can do to get ready to do that. He was short cash to close. I'm like, I said, this is what you're going to need for cash to close total. He's like, well, I think I can save that over the next 3 months. I'm glad he now has a target to shoot for. So there again, getting pre-approved up front. That gives him the roadmap of what he needs to do in 3 months.
Yeah, and you mentioned cash to close, which made me think of another thing that you mentioned last time I saw you. When you get pre-approved with them, they will have, if it's for a specific home, you'll know exactly what that cash out of pocket is, and you'll have that worksheet for the buyer so that they have no doubt whatsoever what they're bringing to closing, which I think is sometimes they don't know until the last second.
Yeah, that becomes a problem in our industry. Is kind of that truthing thing. Somebody get pre-approved with an out-of-state bank or an online bank, and then they'll say, yeah, we can get you 7.5, but my rate would be 8. And I'll talk to them, I'm like, well, did they give you a closing cost worksheet? What's that? Well, as soon as I get somebody pre-approved, they get a pre-approval letter and a closing cost worksheet that breaks down payment, closing costs, and prepaid escrows, taxes, insurance, things like that. And then they know, they have an idea, and I like to overestimate. If it's, let's say for round numbers, I say it's going to be 30,000. Generally, it's going to be less than 30,000.
Right.
It's where if you don't know and you just go an online lender and they're just like, yeah, we can get you 7.5. Well, Brad, I'm not going to go with you. You can't get 7.5. Well, closing, they don't realize that they're paying $5,000 extra for that half a point.
Yep.
So it's very important to understand your numbers up front. That way, you can prepare for those shortfalls or ask for a gift or anything like that.
Sure. Everybody's credit score, everybody's kind of credit story, it's very much like a fingerprint, right? No one's is the same. What may look like apples and apples is often very different. And so getting started early and getting all the information to us and to Brad or to whatever lender you end up using is super important, because it helps me as your realtor understand what our purchase power is, what types of houses can we afford to buy, where can we look, and when we find one that we like, we can move quickly and make sure that we get the strongest, best offer in place so that you win your house, because we all have heard those stories the last 3 or 4 years on how many offers somebody has to write on a house and how many houses they lost in the process. And we want to make sure that we are the best prepared and to help you win that house that you really want.
Yeah. Another problem right now is with interest rates. They're a little volatile. They'll jump. They'll come down.
So this week has been volatile rates. Looking today, there's somewhere they've come down a couple tenths, looks like, and maybe sitting somewhere in the mid 7s again, and which is very different than 8 where it was a week or so ago. And
we fluctuated in the last 6 weeks from 7 to 8.5.
Yeah.
So what happens there is if I have a client that is at the top end of their debt to income ratio, you know, all right, this is their max. Let's say 350 is their max. Well, if that rate goes up 1.5, 275 becomes their max. So you've just lost $75,000 in buying power in a few weeks.
I've had clients in the last couple months that were priced out of their, you know, ideal home range, price range, because the rates went higher and it suddenly changed what they could afford. And I think it's frustrating, and it, you know, you've been looking for a house for a couple months and suddenly that $300,000 house is not in reach anymore, and you have to drop to 275. And I think that can be very challenging, and understanding what's happening with rates and understanding where your purchase power is so important. But where's your crystal ball? I was looking for it when I came in. I want to know.
I guess you're going to ask me where rates going to be.
Where are rates going to be, say at the end of the year or in the spring? I think listening to experts on a daily basis every week, talking about rates and about the market, the conclusion that I get is that no one really understands where the market locally, the world market, the world economy, and all of the things that are impacting rates today. It's very unique. We find ourselves in a pretty unique economic situation with a lot of things going on around the world, coming out of a pandemic, and things aren't operating kind of as usual. And so I think there's a lot of uncertainty, which causes this volatility. So
yeah, so this is always kind of my response to that question, and I get the question. I understand why people ask it. One, I will tell you this: rates will never be 2.
Did you hear that, folks? They're never going to be 2 again. Probably not ever going to be 3 again.
Probably not going to be 3 again for a very, very long time, if ever. But there again, we never expected a global pandemic.
Sure.
So you can't really say ever. But the expectation that you're going to wait until they get back down to 3, you'll be waiting a very, very long time. Even 4 is a very, very long time.
I think a healthy economy, you can see rates in the 5 to 6s is probably a fairly normal expectation. And just looking at statistics, the last 5 years in Kentucky, home values have appreciated about 55%, which is an extremely big number, and actually slightly less than the national average. And I think we are seeing now in central Kentucky a pretty back to normal 2 to 4% appreciation rate. Year over year is kind of where we are sitting right now, which is a very normal growth rate. And I think that, you know, rates are going to go up and down, and you know, marry the house, date the rate kind of story. And
people forget a lot because COVID was such a tremendous strain on all of us mentally, physically, and emotionally that pre-COVID we had gotten to 5.25.
Right.
Like we had held up the 4s for a very, very long time.
Yep.
We had gotten to 5.25. We were expecting to go to 6 pre-COVID. So as long as we can correct back to there, it's right. That's what we're hoping is going to happen by sometime next year, that we'll get back in the 6s.
Yeah, the 30-year average for a 30-year mortgage up until the last was like 7.8%, and so we are definitely in that range again, and saw actual rates at 20+ year highs in the last couple of weeks. But yeah, I think that people that are looking to buy, if you find yourself in that situation, I think buying sooner when house prices are still, they're not dropping. House prices are going up. There's an inventory shortage that's nationwide and will not be solved anytime soon. And so, barring some crash in buyer interest, which is not happening at a huge level, it's certainly toned down a little bit, but people are still buying homes. I think buying a house today and refinancing down the road is probably going to save you some money as opposed to waiting a year or 2 years, because that house that's $300 now is going to be $350 or more in the next couple of years.
And that's what I tell people. They're like, is it a good time to buy? I'm like, it's always a good time to buy.
Yeah.
I mean, that's really cliche in our
It
industry,
is.
but if you think about it, if you buy now, even at 7.5, and in 6 months it's still 7.5, you've built equity.
Yep.
You're building equity. And then at that point, if it goes up or down, you'll figure it out from there. If you buy now, 7.5, 6 months from now, 6.5, you refinance. You've built equity. Now you're back down to where you want to be.
Yeah.
Worst case scenario, you buy now, 7.5. a year from now, it's 8.5 or 9. You still have equity, and you're way better off because that house, like you said, it's probably
It's gonna be
$30,000
worth a
more,
little bit more most.
and a 1.5 more. You're talking, several hundreds of dollars a month. That you can, so yeah, buy now. And this process over, you don't have to stress about it anymore.
Equity in your home is, that's one of the reasons that we're not expecting or looking at any sort of, 2008 housing crisis crash again, is because people have substantial equity in their homes today at a level way beyond where it was in 06, 08. And so almost 70% of folks in the U.S. that own homes have 50% or better equity in their homes right now. And that's a pretty staggering number. And if you don't know what your home's equity is, give me a call. We'll set up a time to come and do a little price analysis of where your house would sell, look at your current mortgage, and figure out where your equity stake is and how that can work for you, whether it's renovations or buying a new home and keeping that rate low with all that equity in that.
Yeah, and you also,
mortgage payment.
It's been a difficult time the last couple of years. People have ran out of debt, with everything coming out of life, things getting more expensive. If someone has accrued quite a bit more debt at higher interest rates, higher than 7%, we can look at either doing a cash out refi to pay that off. Yeah, your rate may go up, but you may save. You can pay off some high interest debt. You might be able to save $500 or $1,000, or you might be able to get a new home, pay off debt, and break even where you are now.
Sure.
With a higher interest rate.
Yeah.
So
We've seen credit card debt is now back up to over $1 trillion, and it came down to an all-time low during the pandemic with all the free money that people had, and now that is flipped around and people are behind. So the economy has been hot for a year and a half or more now, and doesn't seem to be slowing down even with high inflation. So it's a crazy time in the market, and I just, the more information you have, the better prepared you're going to be as you look at buying a house. And you may not think you need to buy a house right now, but you never know what might change to make that situation different. But I really appreciate the conversation. I think that my last question is, what is your favorite sandwich?
I heard this question on the radio coming in, and I was trying to think about it.
It's National Sandwich Day, so we want to know what your favorite
I
sandwich
had
is.
a sandwich in New Orleans called the Debris sandwich.
The debris, is it like a po' boy? Or
It's like a roast beef
okay.
with peppers, but they also, all the drippings.
What's it called again?
A debris.
A debris. All my New Orleans people out there, give me a shout. Let me know what a debris is. If you have pictures, share it. That sounds amazing. I'm torn between two. I love an amazing Cuban, and I love an incredible Reuben. Those are two of my favorite sandwiches. And when you find a good one, they're fantastic. And I will give a shout out to my in town, High on Art and Coffee. Incredible sandwiches. Get the Italian, get the Tangerine Turkey Club on a croissant. Both of those sandwiches today. I might be stopping by there to sample one of those guys today. So thank you very much, everybody, for joining us. If you haven't subscribed, please hit the subscribe button, hit the like button. If you have questions or comments, leave them down below. We'll get back to you. And as always, if you have any questions about real estate in Lexington, Central Kentucky, please reach out. If you have any lending questions, contact Brad. All of our contact information will be below. Thanks, and have a great day.